Global markets are under pressure as escalating tensions in the Middle East rattle investor confidence, sending stocks lower and raising fresh fears of an energy-driven economic shock. Asian stock markets were swept up in a global sell-off on Friday, following losses on Wall Street as concerns grew over a prolonged energy crisis linked to the ongoing Middle East conflict. Rising oil prices and uncertainty over shipping through the Strait of Hormuz pushed borrowing costs higher and weighed heavily on investor sentiment. Markets found limited relief after U.S. President Donald Trump extended by 10 days his ultimatum to strike Iranian power plants, delaying immediate military escalation. Brent crude slipped 1% to $107.07 a barrel after surging nearly 6% overnight, though price movements remained volatile amid fears the conflict could expand into a wider ground war. Iran meanwhile rejected a U.S. proposal to end the conflict, calling it one-sided and unfair. Wall Street futures edged slightly higher during Asian trading, but the broader mood remained cautious after the Nasdaq Composite fell 2.4% overnight, leaving it nearly 11% below its recent record high and firmly in correction territory. Analysts warned that persistent geopolitical headlines were likely to keep markets defensive, with expectations growing for continued volatility. Across Asia, MSCI's broadest index of Asia-Pacific shares outside Japan dropped 1.4%, heading for a weekly loss of 3%. Japan's Nikkei declined 1.3%, South Korea's Kospi plunged 3%, extending weekly losses to 8.5%, while Chinese blue chips fell 1% and Hong Kong's Hang Seng slipped 0.4%. Analysts at Citi warned that a worsening conflict could drag global growth below 2%, push inflation above 4%, and heighten recession risks, particularly for fuel-dependent Asian economies. Global bond markets also reacted sharply as central banks flagged renewed inflation risks. Norway's Norges Bank signaled potential rate hikes ahead, reversing earlier expectations of future cuts. Government bond yields climbed worldwide, with Japan's 10-year yield rising to 2.31% and Australia's benchmark yield jumping above 5%. U.S. Treasury yields held elevated as traders priced in a higher likelihood of Federal Reserve rate increases this year. Currency markets reflected a classic flight to safety, with the US dollar strengthening for a third straight session. The Australian dollar fell to a 2-month low, while the euro held steady and the Japanese yen hovered near the key 160 per dollar level that traders see as a potential trigger for intervention. Gold prices rose modestly after recent declines, as investors sought refuge in safe haven assets. With geopolitical uncertainty driving energy prices and reshaping expectations for growth, inflation, and interest rates, investors are bracing for continued volatility in global markets in the days ahead.